Good morning, everybody. How are you doing out there? Jalapies for my tardiness, but got stuff going on, man. Got stuff going on. I can unpin this now. What's going on with this? What is going on with this? Good morning, Tish. How you doing? Trying to get myself together over here. This will not let me be great. This will not let me be great. I'm sorry, y'all. Okay. Good morning, everybody. Good morning to who is that in there? Here to learn and share. I see in there early at the 7:41. Shout out Thomas in there early. Hey, Tish, what's up? That's all I see in the chat for right now. So we're going to go ahead and get into it. Good morning, everybody. I'd like to welcome y'all to another episode of the Overnight Price Action Review. Yes. Overnight Price Action. We are back in effect. We had stopped doing it for a while. Buenos dias, Valdez. Buenos dias. Valdez, do me a favor. Tell my nephews I said, Spalene, where you at, baby? Here I go. Shout out Valdez in the building. Valdez is in the building. Hey, for those who don't know, we had I stopped doing price action, overnight price action reviews a while back. What's up, Will? Because I didn't want it to be a crutch. I felt like it was becoming a crutch for people, and people were putting like a lot of weight on the way I saw price and not really forcing themselves to analyze the price for themselves. So I stopped doing the overnight because I don't want carbon copies. I want to teach people how to fish. And but me being the person that I am, wanting to help people, I don't know how many people in the gang still need it. I don't know how many new people coming around. I don't really track that stuff like that. So I said, hey, we're going to start back up the overnight price action, you know what I'm saying, for people who still need a little bit of help on like analyzing price and how price moves, right? So without further ado, let's jump over to the chart, shall we? Okay. As you can see, overnight, we just consolidated. And then we started moving here around about 6:30. Right around 6 o'clock, look like we got us a nice little Judas swing, and we made a move toward that high. All right. For those who don't know what I'm talking about, the price right here. Let me give you a vertical line. Right here. We're gonna make this educational real quick, and then we're gonna talk about the price action because the price didn't really do much overnight, but we're still gonna analyze it. So the trading day starts right there at 6 p.m. Right? From 6 p.m. all the way through the London, right? London starts right there at 3 a.m. all the way through to this 6:15 candle right there. Let's put another line over there. So we'll just go here because this is the highest high. That 6 a.m. candle. Can somebody say nothing in price is an accident? Can somebody please drop in the chat if you see what's the same about this line when we opened up and this line right here? It has something to do with the x-axis. Let me turn on my fancy dancy. This is the x-axis. This is the y-axis. Who in here? Now tell me what you see the same about these two lines. I just said it, right? This right here and this line right here. These two lines I just marked. I was like, hey, let's just do this one here because it's the high and this is the 6 o'clock candle, right? What do y'all see the same between those two? It has to do with the x-axis. Somebody put it in the chat. Now, while I'm waiting on y'all to put that in the chat. Oh, the market is open. The market is open. The market is open. If you're going to trade, please trade safe. If you're not going to trade, please take a copious amounts of notes so you can go back and study what you saw the day in the price action. And please enjoy your day and be safe out here in these trading streets. That's your boy, Aranya Grande. Now, what's up, Michelle Tucker? Ain't nobody going to put down what's the same about these two lines? Ain't nobody going to put down what's the same about these two lines? Huh? 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 These two lines right there, Michelle. These two lines right there. 6 of the clock open, 6 of the clock candle. What's the same about those two? Yes, Tish is a 12-hour difference, but what's the same about those two? It has to do with the x-axis. And while we waiting on that, who knows and who's good at math? Who's good at math type stuff, right? And not really just math. Who's good at cause and effect type stuff, right? So in math, when anything, when you have a x-axis and a y-axis, right? The x-axis is typically what? What is the x-axis? Does anybody know? Is the x-axis the cause or the effect? If you have an x-axis and a y-axis. I'm going somewhere with this. Y'all humor me. Right? So when you have an x-axis and a y-axis, is the x-axis the cause or the effect? Huh? Huh? It's the cause. Very good, Michelle. The x-axis is the cause because they are like a independent variable. You know what I'm saying? They're just doing what they want to do. You know what I'm saying? The x-axis is doing what they want to do. The x-axis, let me get this mic out my face. The x-axis is an independent variable. It's the cause, right? And then the y-axis is the effect. That's the dependent variable. You need something to happen on X for Y to happen. For example, lightning struck that tree. That was the cause, the effect. The tree burst into flames. Lightning striking the tree is the cause. The tree bursting into flames is the effect, right? So whenever you're looking at price, what's on the x-axis? Time is on the x-axis. What's on the y-axis? Price. Time is the cause. Price is the effect. That's the key to understanding how to read price. Time is the most important part of these markets. The algorithm is operating off of time. At certain times, it's gonna cause a certain effect in price. Cause and effect. Cause and effect. Cause and effect. Say it with me. Cause and effect. Say it with me. Cause and effect. How many of y'all at work right now saying cause and effect? Okay. And says nothing in price is an accident. You see right here, I started out saying we just consolidated all night and we started making the move right here. And then I said, this is the 6 o'clock open. I wasn't even thinking about doing this. Then I said, we started dropping right over here. And I was like, you know what? Let's just go from the highest high of this move, and clicked on it. And I noticed that it was, all this right here is around 6 o'clock, right? So right here, we came down right there and right there on, because we still consolidating here, and right here as we pushed up, right, it started coming back down. That right there is, come on, give me the freaking, right there. As we start to push up and then drop, right, because we got this price leg right here from this low to that high, right? And then we started to consolidate a little bit. We pushed up and then we dropped right there. So this right here is the 6 o'clock open, and this right here is the 6 o'clock candle. 6 and 6, right? So at 6 o'clock, the day started, and then at 6 o'clock, we got our Judas swing to attack that high right there, right? Nothing in price is an accident. Nothing in price is an accident. Is it just by chance when this candle came up here, and when this candle came up here, touched this liquidity and rejected off, right? Do you think it was an accident that at 6 o'clock that the market, the algorithm would hit you with a Judas swing? That was not an accident, right? I'm just peeping all of this right now in real time while I'm talking to y'all, because it all started from when I said this, and we're gonna look at this drop here. Now let's really analyze this. This the kind of stuff I be doing. I be like going deep down the rabbit hole. This kind of stuff, if you want to be like just crazy with it, when it comes to reading price, this kind of stuff you got to think on this level, right? You got to think on this level. I'm on a new level. I'm on a new level. Bought me a new shelf. Put it in the dirt. Champ with the new belt. I'm putting work. I'm on a new level. Hey, so check it out. Do you think, let's put it in replay mode real quick. Right? So, if I should stay. Now, looking at what price has going on right here. Right? We're going to get to the overnight price action in a minute. I'm in a rabbit hole right now. So, we have sell side liquidity here. We have sell side liquidity here. We have sell side liquidity down here at this daily low down there. So we got 1, 2, 3 levels of sell side liquidity, right? Price comes down during the London. Price comes down during the London, right? Takes out the first level of sell side liquidity. We getting over here to this nasty Judas swing, right? Takes out the liquidity, okay? And so thinking about how price trades, you say, okay, a lot of times we get hit with a Judas swing at the beginning of the session. So you come down, you take out this liquidity, you don't really displace below it, and then you immediately kind of reject off of it right there. So now you like, okay, this probably going to be a Judas swing. We probably going to be going back to this high right here. This high took out that low. I mean, this high right there. Mark it out so y'all know. We say this high. This high. Okay. Is this too small for y'all? Move some of this stuff out of the way. This high came down and took out this sell side liquidity, and then we started rejecting off of it, right? So we said, okay, this might be a Judas swing. So we're looking to take out this high. Okay. We get the Judas swing, take out that high, and then when we touch this buy side liquidity, right? When we take out that buy side liquidity, we get a heavy rejection, right? Can somebody tell me if you get a heavy rejection off of this, what are you going to be thinking? We're going down, right? We're going down. So first thing you're going to target is this low right here. Why? Because this low sent you up there, and then we rejected off of that high, right? So this low, okay, this low sent us up here. We hit this high and rejected off. So now we're looking down, right? We're looking down now. Okay. So since we're looking down now, we're looking to attack the lows. And so we already took out this low right here. So now we're looking to attack that low. And then we see we got a close proximity of some sell side there. And then we got the daily low down there. Okay. The daily low down there. And le dollar, right, is dropping now. Right. The dollar dropping now. at this time, let's go back to that time. What was the time? 6:15 in the morning. Yeah. So the dollar, yeah, the dollar dropping right there, coming toward these lows right there. It's been kind of out of sync, but that could be an indication that it might go up. I give it to that it might go up, but it's been kind of out of sync and funky. I want to see if the dollar was going up. So, we reject off of that. The dollar was looking weak, so we're anticipating it to go up. We reject here, so now we're looking down, right? So now we're looking down. So we coming down, and we get there into, this is that 6 o'clock candle, right? This that 6 o'clock candle. So at 6 o'clock, well, at the end of this run right here, which at the end of this run is the start of 6 o'clock. So at 6 o'clock, the algorithm now has given you a sign to look down, right? And when I say look down, anticipate price going down, right? Because this run got us looking down, right? That run got us looking down. So price moves down, right? Takes out that low, right? Aggressively. Runs through it, right? Very close to that low right there. Now, what do we have here? We got an aggressive move down, right? A bearish break in market structure after taking liquidity with a SIBI. What is that the framework for? What model is that the framework for? Right here. You sweep buy side, aggressively take sell side, and leave an imbalance. What model is that right there? Can somebody put in the chat and tell me what model that is right there? It's a very famous model, made famous by a person that we all know. 2022 model. Very good. So at 6 o'clock, the algorithm got you looking down, and it just so happens to give you a beautiful short entry possibility, right? Just so happens to give you a beautiful short entry possibility, right? Now let's really inspect this thing here. Let's really inspect this thing here. That's equilibrium of this move right here, right? And that equilibrium just so happens to sit where? Right at consequent encroachment, a beautiful shorting opportunity, right? But guess what the algorithm does? At 6 o'clock, this consolidation right here started at 6 o'clock. At 6 o'clock, it hit us with what? Led you that swing. Led you that swing. We got hit with the Judas swing right here. Why? Because time is the most important part of trading. Time is the most important part. Then price. If you don't have the bias right, if your bias is wrong, you can scalp, you can make money, but if you try to hold for longer moves, right? If you try to hold for longer moves, you may end up paying the piper. Just like in this case right here. If you took it to this low right there, you was good. But if you was looking for that low or maybe the daily low, because of this heavy rejection and how price has been failing to displace to the upside, look at this. Look at this right here. It's just slowly grinding down, right? You would have gotten hit with led you that swing. Yeah, say watch DXY reverse here. It's been like the dollar in the indexes, they haven't been like the indexes. What I like to use the dollar for like overall sentiment when it comes to the indexes. I don't like using the dollar for intraday sentiment on the indexes. Now, the dollar is great for intraday sentiment on like currency pairs that's paired with the dollar, because they like inversely correlated, like pretty much lockstep. But for the indices, I just like to use it for overall arching theme. Like, is the dollar bullish or bearish overall? You know what I'm saying? And then I look for the overall in the indices based off the dollar. That's what I like to use the dollar for. So now that we done went through the deeper dive into this Judas swing, and it happening right at 6 when the consolidation started at 6, then we got Le Judas swing starting at 6. We've broke that down. Now let's go back and look at the overnight price action. It's 952. Okay. Le overnight price action. Le overnight price action. Those are my quarterly theory lines and my midnight. So starting at 6 p.m. All right. We were pretty much consolidating. We got our true week open here at what is this? 52, 50, 52, 56 even. Why am I calling that the true week open and instead of the true Asian open? Because this is Tuesday. Tuesday is quarter 2, right? So the true day open for the start of quarter 2 is the true open. So quarter 2, y'all get it? Y'all get it? Got it? Okay. So Tuesday start, true opening is the start of quarter 2. So true week open right there. That's also the true Asian open. We trade back above the Asian open. We don't take out the Asian high, right? And we started going up around 10:30, 10:45. We started moving up. At midnight, midnight open is at 52, 54.75. We continued our crest. We continued our march up, making a peak at on the 115 candle, right? So we march straight up from midnight, and then we start to drop, right? This is another dirty dog trick because, well, not so much because of how the London, because of how the Asian traded. The Asian wasn't like a super tight range. It's not a big range, right? It's not a big range by no stretch of the imagination. It's only a 8-point range, right? So it's not a big range, but it's just not compact and tight. It's kind of moving. And so from midnight, we make a beeline straight up, right? And then we start to drop. I say that's the dirty dog trick because we made a beeline straight up, but we did not take out the buy side, and then we dropped. So if we're just looking at, hey, the Asian was in a small range, and then midnight we traded straight up from midnight, and then we dropped. Okay, you could be looking at this like, hey, this possibly the high of the day. So you're looking for prices to continue down, right? But what did you get? You got, you got hit with a Le Judas right here, starting right here at the 3 a.m. candle, right? We failed to reach the high and dropped immediately, right? Further strengthening the idea like, hey, this probably gonna be the high of the day. We finna come down here and get all of this trend line liquidity over here, right? So we come down and we get hit with Le Judas. Le Judas bust us in the head right here. So we got the Judas swing here, right there on the 3 p.m. The 3 a.m. Come down here, take out that sell side there, and then pop back up and take out that buy side. Le Judas swing, right? We got hit with Le Judas swing. So after we got hit with the Judas swing there, again, it was set up the exact same way. On Le Judas, we had a heavy expansion down with displacement. The SIBI's there, took out the sell side, then we immediately bust through the SIBI and went up there and took out that high right there. I was actually back here. I didn't trade to London, but I was back here paying for some stuff, and I already paid my bills. I was paying for some stuff and updating some stuff in the checkbook, and I was just sitting at the computer and watching price while I was doing that. And it was right around this time here. It was after 5. It wasn't quite 5, but it was well after 4. So it was somewhere around in here, right? Somewhere around in here. And no, you know what? It was earlier than that, because I remember saying that SIBI was gonna fail. I remember saying that, and we hadn't traded back into it. I remember thinking in my head that SIBI's gonna fail, and it did. Okay, but led you to swing, and then we took out the high that was of London thus far. Still had not taken out this high from during the Asian time frame. Then here on the 7:45 candle, right after the true session open for New York, we finally took out the Asian high and got a commanding closure above it, right? Never gave an opportunity as far as a retracement level on this 15-minute to participate in attacking this buy side right here. Once this 7:45 candle took out the Asian high, the overnight high, whatever you want to call it, the 6 o'clock high, 6 p.m. high, price just continued up, taking out this high from yesterday's afternoon, consolidated there, never retraced back into either of these imbalances, and went up and took out the buy side from the daily, and it also took out this is that the weekly high? That looks like a weekly high. That looks like a weekly high. Let's see if that's a weekly high. Okay, where's my line? No, it's not a weekly high, but it was the high from Friday. It was a high from Friday, high from last Friday. Nowhere near the weekly high. I was just saying if it was a weekly high because it was from a different week. It was the high from Friday. The weekly high is like way over here somewhere. But it was the high from last Friday. So we took out the high from last Friday also. And then we came tumbling down. Took out the high from the daily high and the high from last Friday. And we came tumbling down. And now we've blown through that imbalance and that imbalance, the ones that we never traded back to. Remember when I said once we took out that 6 p.m. high, we never traded back into them. Now price just cut through it like butter. Butter. Cut through it like butter. Butter. Signifying that up there was a balanced price range. All of this price action up here, right? It just cut through it like butter. Now, we just came back down, dipped below the midnight price, which is the true day open. Right? If this bullish move is to continue, below midnight is prime real estate to be buying, especially when it's in the discount of the move. Right? This is a deep discount of this move right here. That's prime real estate for buying if the bullishness was to continue. But me, myself, and I ain't really interested in doing a whole lot of trading the early part of this week, because if we look at the economic calendar, we have CPI tomorrow, and we got FOMC minutes tomorrow afternoon, and then we got PPI Thursday. Right? So, and just from my experience, a lot of times before the big move, throwback gang, y'all remember this? Before the big move, we used to say price would make a move and then slide to the right, slide to the right, right? So that's why I'm not interested in like participating, because if we look at this right here, right? If you look at it from this way, made a big move, right? And now we just sliding to the right. If you're looking at it from that perspective there, right? Zoom out perspective, made a big move, slide to the right. More zoomed in perspective, made a big move, sliding to the right. See, move, slide to the right, right? And then if you notice, we consolidated here, we consolidated there. This right here is a weekly fair value gap that that consolidation is taking part in. So right around here, the algorithm has been giving you clues that right around this area right here, right in here, is some form of fair value. Right? You got consolidation here, consolidation here, consolidation here, consolidate right in this little area right here. There's some form of fair value there to the algorithm. Nobody is too much on side or off side in this area. And price tends to do that before big numbers like CPI. That's why I'm like, I'm chilling, man. I don't like trading in chop. I don't like I can scalp, but I don't like to aggravate. I just want to put my trade on and comfortably watch it just move to its target. I don't like the chop. Anyway, I yield my time. I yield my time. That will be the end of. Oh, I closed my picture. That will be the end of the overnight price action review. Oh man, I forgot to open up the Discordia for anybody who wanted to pop up if they had a question. Don't switch. Okay, I'm in the Discord. Miss V, what you doing in the Discord? What you doing in the chat, in the Discord, in the voice? What are you doing in there? Miss V, this is your conscience talking to you. Can you hear me, Miss V? Miss V, are you working, Miss V? Why are you still in the voice chat, Miss V? Hey, I'm in the voice right now. If anybody got a question or something they want to ask or add, I'm in the voice right now. Feel free to unmute and ask away, and I will attempt to give my thoughts on it. Hey, where'd that go? Mm, 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 mm. While I'm waiting for to see if anybody got anything for the.
Can you hear me?
I hear you.
Okay, yes, I am at work. Good morning.
Good morning. How are you?
I'm doing okay. We had death in our family a couple of Fridays ago.
Oh man, I'm sorry to hear that.
Yes, thank you. Friday before last, my father-in-law passed away. So yeah, but we're doing better. We're doing better.
Oh man, you and the family need anything? Y'all gonna be.
No, we're good. No, this our pray. This keep us in your just keep us in your prayers.
We'll definitely do that. We'll definitely do that.
That's another reason why I haven't really been participating lately. I haven't been really online or anything. So I'm back on now. So I'm trying to play catch up now.
Okay.
Yeah.
What you got? What you got? You got something for me?
No. Actually, I had just brought it up. I had brought Discord up and just plugged it in, and I had my earphones on. I said, well, whenever if you ever happen to come on this morning, then I already had it plugged in. Since right now it's a little quiet in the office, so I said, let me see if I can sneak in and listen to some stuff if you want to start talking.
Oh, I was I forgot to open the Discord up. I done did a whole overnight price action on YouTube.
Oh
I-
Lord.
but I forgot to open the Discord. I didn't open it, but it's on YouTube. You can go back and
On
watch it
YouTube.
later. Yeah, you go
Okay,
back and watch it
I'll do
later.
that. I'll do that. I'll go back on there. I'll go back on there later on today and take a look at it because I have to play catch up. Like I said, I'm behind a little bit, but I'm gonna play catch up and get caught up with everything.
Yeah, that's my bad. I was about to say. I was about to just share a little
Hmm.
tidbit with the mentees since that
Okay.
since we was on here. And I hold on, is that a five? Michelle asked the question. Is that a 5 a.m. can is the 5 a.m. candle on the 1 hour a bullish breaker? You said the 5 a.m. candle on the 1 hour, Michelle. Let me see. Let's find the 5 a.m. candle. 5 a.m. candle right there. Yes, that would be a bullish breaker, right? You got that high, that low, and that higher high. That would be a bullish breaker. All right. And if it fits into the narrative, what you want to see. this kind of plays into what I was about to talk about for the mentees. It go the same for all PD arrays, right? So when you're looking at PD arrays, especially like imbalances, this is what I look at: imbalances and oh, I wasn't sharing my screen. I'm sorry. Let me share my screen on here. I wasn't sharing my screen in the Discord. Let me share. Make sure I share my screen. All right, because I'm like, why did V jump out of there? But I wasn't sharing my screen. I jollipize for that, V. For not sharing my screen. I just been slipping on Discord today. So with any PD array, right, you want to look at like what price is telling you. Okay, so we're gonna call this session this teachable moment is being brought to you by Michelle Tucker, and we're gonna call it to wick or not to wick. To wick or not to wick. Okay, so y'all know the fair value gap is my favorite PD array. Why? Because price seeks liquidity and balance, right? The fair value gap is an imbalance. So they tell you a lot. The fair value gaps tell you a lot, right? So this fair value gap right here, that BISI right there, right, is telling you a lot, right? So price starts to move up and it's moving up relatively quick. How do you know? It creates a BISI right here. Now, this, I'm gonna get back to you, Michelle. I'm going into what I was gonna share with the mentees real quick. Now, mentees, this is mad advanced, but I want to share this with y'all, and so you'll have something to look forward to in the future. And everybody else, y'all just reaping the benefits of it, because all the mentorship videos for free anyway, you know. But you have the BISI here. The second candle is always the imbalance on, because it's a 3 candle pattern. This third candle right here, right, it's telling you a story too. How this, because y'all ever heard me say, when I be like, where this candle right here closed, we should have had a fair value gap of this size based off of how this candle opened, right? Like if the candle retraces back down, y'all hear me say, hey, we should have had a fair value gap of this size, but this candle retraced down. Why? Because that third candle is telling you a story. You know what I'm saying? And this is getting way into what I supposed to be. This is, anyway, I'm just gonna stop it right there on that, and I'm gonna do something else for the mentees, because this is the video that's dropping Friday. Now, with the fair value gaps, I'll drop this for the mentees. With the fair value gaps, you want to pair it to your entry time, right? If it's an hourly fair value gap, right, you want to pair the price action you're watching to of the 5 minute. So if you're looking at a 5 minute fair value, a 15 hourly fair value gap, you want to look at price reactions on the 5 minute compared to that hourly fair value gap. The other stuff I was going to talk about, that's going to be in the video Friday. So I'll just share that little piece right there. I just thought about it because I was about to start talking about it, because when stuff be on your mind, you know, so it's going to be in the video Friday. And so I'll just leave it for the vid, because y'all going to have homework and all of that. But this nugget, whatever time frame the fair value gap is on, go your 2 time frames down and look for the price reaction on that time frame. When it comes to imbalances, you always want to pair your fair value gaps to your gap time frame and your entry time frame. If you're looking at your entry time frame, right? If you're looking at your entry time frame and there's fair value gaps there, don't put the weight on that fair value gap. Put the weight on the fair value gap from your higher time frame, your 2 time frames up. Now, you want to see it creating fair value gaps on your entry time frame. That's great, right? But you want to pair, you want an hourly time frame, 5 minute, 15-minute time frame, 1 minute. You want to put the weight on the higher time frame imbalance and then look to see how price is reacting on your entry time frame. And it's fine. Like that's why when you see people saying, "Oh, I took a trade off of that fair value gap and I was looking at the 1 minute," they weren't just taking it because of that 1 minute fair value gap. They was taking it at that 1 minute fair value gap, but they was taking it because of a 15-minute situation. You see what I'm saying? It's okay to take it at the lower time frame, but make the reason or the because the higher time frame. That's what I will leave you for a tip for the mentees. Now, Michelle, let's get back to what we was talking about. With what you like this, let's look at this breaker right here. Michelle said, "Was this a breaker?" Right? Where are my candles at? Right here. 5 right here. So we went here, there, and then there. Right? Right? So, right. That's your breaker right there. Now getting back to wick or not to wick. Okay. When do you wick? Well, when does Timmy Rogers wick and when does Timmy Rogers not wick? Meaning use the body. This little fair value gap right here tells me everything that I need to know about should I wick or not wick. Why? Right here at this Bessie, if we look to the left, right? If we look to the left at this Bessie, you notice we have a wick inside the Bessie. In this case right here, I'm going to mark out this breaker at the wick. Why? Because it's overlapping with my lovely fair value gap. Right? If the wick is outside of the fair value gap, let's just say if this wick, let's just say this wick came all the way up here, right? And was outside of the fair value gap. Right? Let's say the wick went all the way up there and was outside of this fair value gap right there. Then I'm marking this breaker. I'm marking this breaker at the body. Right there. I'm marking it at the body. And wherever I mark it at, that's where I want to see the reaction off of that PD array. If I don't get the reaction off of the PD array where I marked it based off what price is telling me, I'm saying you are manipulating price and I don't want to take part in it. That's what I'm saying. So, in the case of Le Breaker here, how price melted down through that high right there, I would say you are manipulating price and I don't want to take part in it. Because with this imbalance and that wick inside that imbalance, price was telling me I want to giddy up, giddy up, giddy up, giddy up. But for us to come up here and take out these highs and then reject like that and just blow through that high there, we've gone through this price right here, closed below it, right? And we're still struggling up in here. Matter of fact, look at that. We haven't even gotten back to that high price yet. We're still struggling up in here. You are manipulating price, and I don't want any parts of it. Because price, when price gives you clues, price will move. Bar, right? When it gives you clues, it will move. When you get to a point where it should be a low resistance liquidity run, it should move. Price should move. For example, if you have touched into all of your PD arrays, price should move. Price should move. For example, let's look at this right here. Let's say we end up creating a SIBI right here. Right? Let's just say we end up creating a SIBI right here. Right? And let's say this candle closed, this 10 a.m. candle closes below the close of this 9 a.m. candle. Right? So this 10 a.m. candle, if it closes below this 9 a.m. and we leave that SIBI right there, this third candle of this 3-candle pattern of making this SIBI, it would be saying, I want to continue down because I'm not giving like a deep retracement back into this SIBI, right? And then if you look, there is no other PD arrays. There are no other PD arrays in this price leg right here on the move up. There's no other PD arrays down here. So the only thing left down here is that swing low right there. Right? That's the only thing left down there. So from this fair value gap, if we create it to that swing low, that should be a pretty swift move. Just say if we use that to go lower, that should be a pretty swift move because there's no other PD array down here that's supposed to support price. We've blown through the fair value gap and we've touched the order block. Right? We trade this candle right here, blew through the fair value gap. This candle right here traded into the bullish order block. Right? Here's our reaction off of the bullish order block. Right there, we pushed up, creating that SIBI. So there's no other PD array over here to do anything from. So if price was to trade back up to this imbalance, right, you would expect it to barely touch it and then make a Speedy Gonzalez run for this sell side, because that would be a low resistance liquidity run. There's nothing that is to act as resistance between this low and that SIBI that's designed to send price there. That's a low resistance liquidity run, right? Coming back over here at this point, right? When price came up here and took out this buy side right there, right? We didn't quite make it into this bearish breaker right there. Took out this buy side, right? So we're inside this fair value gap. So we're not even paying this any attention because we're in that one. But we got this breaker here Okay. We got this imbalance up here. We got this breaker up there. We got this could be a breaker here too inside there. Technically, it could be, but we ain't gonna go off of that one. But that down close candle there, that breaker, that order block, that breaker, that fair value gap, there's a lot of resistance up here to get to that high right there. So it's like price will be touch and go, touch and go, touch and go, touch and go. You see what I'm saying? We can come up, we can react off of this breaker, right? We can come back down. We can come up, we can react off this fair value gap. We can come up, we can react off that breaker right there. We can come up, we can react off this order block. We can come, you know what I'm saying? It can be touch and go, touch and go, touch and go. But in this case over here, there's nothing there but the imbalance and the low. So that should be a low resistance liquidity run. And if price was to come in there, trade down, and stop right here and then shoot back up above that, I would say, you are manipulating price. And I don't want to take part in that. For your style, would you consider that to be in consolidation? I remember you saying that you don't consider them if it's in consolidation. Yeah. Yeah. When it's inside consolidation, I don't pay it no attention. I don't pay it no attention when it's inside consolidation. I like to look for breakers like on moves, right? On moves. Like if we get down below this right here, then I'll be looking at the breaker over here. You see what I'm saying? Because that's the lowest down close candle right there. We came down, we shot up, and if we shoot down here, I'll be looking at the breaker as far as like we were coming down, we shot up, took out buy side, and then we shot, but we would need like a nice move down, right? But just being inside this chop and we're just, you know what I'm saying, we just leaving this right here. I'm not looking for a breaker inside there. Like on like this 5 a.m. candle. I'm not looking for this to be a breaker because that's right inside the consolidation. But I would look for this to be the breaker right here because this is during what's the name? We started moving down here, and I would just look at this little piece in there, those 3 candles there, as time distortion, right? I'm looking at that as time distortion because this 5 o'clock starts like the dead zone. That's like the lunchtime, London lunchtime. Man, melting through that. Man, when I say it right here, look at this right here. Look at God. You see how it just played out? Man, when I said mark out that high because it's in line with that fair value gap right there. And if we don't get a reaction off of that high right there to go back up, I said, I don't want to take part in buying that because you are manipulating price, sir. And look what happened. We melted down and took out the low. You can't fake this. We're talking about it on real price action. And you're seeing it work out. But Tim, you're not trading. How do we know you make money? I don't care if you think I make money or not. I'm just here to help people learn how to read price so that they can take what they learn and implement it in their strategy and they can make money. I don't care if you think I make money or not. Any other questions? Man, that dude crazy. Why he be talking like that? That dude crazy. Hey, man, I'm hungry as a hostage, man. I'm about to go get me something to eat unless somebody got a question. Do anybody got a? Hey man, my feelings be hurt. Y'all know I like class participation, and y'all know I like interacting with the gang. My feelings be hurt. Man, we melting off. Let me see what. No, we ain't got nothing on the calendar for today. We ain't got no news on the calendar. Did anybody get anything out of this? Did anybody get anything out of this through all my ranting, through all of my antics? Did y'all get anything out of how I was talking about the wick or not to wick and my explanation of why? Did y'all get that? Because I want to make sure y'all get it, because a lot of times when I hear people talk about stuff and they don't do a good job at explaining the why behind what they're saying, I find myself looking for it everywhere. You know what I'm saying? Did I give y'all a good explanation of why I wick or I don't wick when it comes to, and I use fair value gaps? So it's not a real breaker because of consolidation. Is that what? No, it's not because of the consolidation, right? It's not because of the consolidation. It's not a real breaker because one, there's a lot of manipulation going on, and two, right? And two, this time frame that we're looking at is bearish. You know what I'm saying? This hourly time frame is bearish. So that's number one. It's not a bullish breaker because the time frame that you're looking at is bearish, and it's so this bullish breaker right here wouldn't be in line with the draw for this time frame. That's why it's not a bullish breaker. Did I confuse you? Okay, so any PD array, right? Just in case I confused you, any PD array, it has to fit the overall narrative, right? So if the time frame you're looking at, right? The time frame you're looking at, if it's bearish, then you should be looking for you should be looking for anything that's supposed to support price to fail. Yes, you can't just look for the pattern. Yes, we're not pattern traders. You can't just look for the pattern. We're not pattern traders. We trade based off of the draw. Remember, Picasso house is the most important. Remember our buddy Picasso? That's the most important draw. Remember, time, price, bias, draw, right? Time, price, bias, draw. The draw is the most important. So where Picasso live, right? Where Picasso live, the big money, the algorithm is going to do things at a certain time that's going to confirm or it's going to confirm or nullify your bias, and then price is going to do its thing. Time, price, bias, draw, right? Draw is king. Picasso, where does he live? Right? At a certain time, the algorithm is going to do something to confirm or nullify your bias. And then price is going to act. Time, price, bias, draw. Y'all get it? You understand that? I be trying to think of different ways to say it. I've been saying the same thing over and over and over and over and over. I be trying to think of different ways to say it. What's up, Rhonda? You popped in. You got something you want to say? Time, price, bias, draw. Where Picasso lives. Then at a certain time, the algorithm gonna confirm or deny your bias. I mean, confirm or nullify your bias, and then price gonna move. Oh, hey, I just came up with that one off the top of my head. I think that's good. I think that's good. I don't care what y'all think. I think that's good. Hey, so like you always want to, again, remember what I was saying about the fair value gaps. You want to, you know what I'm saying, with your 2 time frame down thing, right? The 2 time frame down thing. And you know how we started to talk, would be like, remember when we did our weekend chart prep? We did the weekend chart prep. We was like, the monthly, you know what I'm saying? The last bias we had was bullish. We got to stay there. The weekly was giving me 50-50. The daily was giving me 50-50. I think the 4 hour we said was bearish. The 4 hour was giving us bearish. The 1 hour giving us bearish. You know what I'm saying? We didn't go down to the 1 hour on the weekend chart prep, but we got to the 4 hour. The 4 hour was giving us bearish. The daily was giving us 50-50. You know what I'm saying? 50-50 price action. It was like it had broken bearish, but it was giving me a 50-50 feel because we was ping-ponging in between PD arrays, right? We had a break in market structure, then we bounced off the order block. You know what I'm saying? So it was giving me the 50-50. Had a bearish break in market structure, but a 50-50 feel. 4 hour was completely bearish. 1 hour, completely bearish. So if it's bearish, you're anticipating anything that looks like it's supposed to support price to fail. You're anticipating that to fail. And if it doesn't fail, you're like, hey, you're manipulating price, you dirty dog. I don't want to take part in that. That boy 2 kinds of crazy. That boy 2 kinds of crazy. Hey, man. I guess Rhonda ain't want to say nothing, or her mic wasn't working. I think that's it, man. We talked about a whole lot of stuff. Hopefully somebody got something out of it. Yeah, that's it. Hey, man, it's your boy, Aranya Grande. You was late for class. Go to the dean's office right now. Miss Green, could you please report to the dean's office? You will have detention. Thank you. Hey, man, I appreciate y'all, man. That's it. Hey, man, it's far behind. Oh, I just looked at the YouTube. It's way behind. Oh, it ain't on live. That's why it's behind. Okay. All right. Hey, man, that's it. I appreciate y'all, man. I'm fun to go for real. Again, hopefully y'all got something out of this. I try to make it fun. I try to make it entertaining, but also I try to share the things that's inside the mind of little Timmy Rogers. And hopefully, if you haven't seen it, you're starting to see it. If you've got a inkling of it, hopefully it's starting to make sense. And one day you won't need to tap into Tim's tidbits because it's like you're gonna be moved on. You're gonna be like, okay, Tim, I got it. I've outgrown you. It's time for me to move on. No hard feelings. We're gonna part ways. That's what I want. I want you to come get this information, internalize it to where it makes sense for you, and then move on to broader, greener pastures. I'm just a dude from Fort Lauderdale, Florida. I can only say it so many ways. You know what I'm saying? I'll be repeating myself all the time. I'll be trying to come up with creative ways to say the same thing that be in my mind. But long as there's somebody out there with the desire to learn this, I'll be on Al Gore's internet doing it. Till the next time, man. Y'all be safe out here in these trading streets. It's your boy, Aranya Grande. For my non-Spanish speaking compadres, that's Big Spider. You hear me? Gone, man.